Today's crypto market feels unusually quiet. There's no explosive rally, no panic crash, just an eerie calm that most people are ignoring. And make no mistake, this silence is not random. It often appears right before big moves happen. When volatility compresses, weak hands drop out, social media buzz fades. People think nothing is happening, but experienced traders know this phase better than any chart pattern. Every major crypto cycle, whether bullish or bearish, has a period of quiet build-up. Before Bitcoin's biggest surges, before altcoin explosions, before unexpected breakouts, the market goes silent. Not because nothing is happening, but because smart money is positioning quietly. Bitcoin, the king of crypto, has been moving in a narrow range. Some see stagnation. Others see indecision. But what we're really seeing is absorption. The market quietly absorbing orders, liquidity, and capital. Large holders aren't panicking. They're adjusting positions. They're managing portfolios strategically, not emotionally. When volatility disappears, fear also fades. That doesn't mean strength or weakness. It means the market is compressing. And compressed markets do not stay that way for long. Institutions don't look at price charts the way retail does. They measure liquidity, order flow, derivatives, and accumulation patterns. They study on-chain signals that reveal long-term commitment, not short-term speculation. Right now, those signals are telling us something critical. While retail interest has cooled, institutional interest has not disappeared, it has shifted. Bitcoin dominance remains stable. Smart contracts and decentralized finance continue to innovate. Scaling solutions and layer 2 adoption are quietly improving Ethereum's ecosystem. Institutional crypto custody services are expanding. Regulatory clarity, while slow, is improving in certain regions. This phase is not a crisis. It is a recalibration. When crypto recalibrates, it becomes stronger structurally than before. Now look at many altcoins appear dormant to casual observers. Trading volume is down. Community attention is low. But quiet assets often move hardest when volatility returns. Why? Because accumulation happens when nobody is watching. When social media noise dies down, that's when strategic capital steps in. This pattern isn't new. It's historical. But most market participants either forget it or never learn it. Retail traders look for headlines. Institutions position before headlines exist. And that difference is why quiet phases matter. Now, let's dive deeper into what the institutions are doing. While retail traders are distracted by price noise and headlines, institutional players are quietly moving capital. They aren't chasing the latest tweet or hype cycle. They analyze liquidity, accumulation patterns, and derivatives positions. Every small shift in volume, every subtle change in market depth tells a story that most people miss. Look at Bitcoin's order books. Large blocks are being absorbed quietly. This is a signal of accumulation, not panic. Smart money is stacking positions, knowing that volatility will return, and when it does, the moves will be amplified. Altcoins are telling a similar story. On the surface, prices may appear stagnant, trading volume is low, and social media buzz is faded. But underneath, exchanges are seeing unusual activity. Institutional wallets are quietly growing their stakes, often in under-the-radar projects with strong fundamentals. Liquidity is another key indicator. Major exchanges show constrained liquidity in top coins. That means when a large buy or sell occurs, the price impact will be immediate and significant. These are the conditions that create explosive moves in crypto, the kind that make early observers huge gains. Meanwhile, macroeconomic conditions cannot be ignored. Global interest rates, inflation data, and currency fluctuations are indirectly shaping crypto's trajectory. Investors are treating Bitcoin and other digital assets as a hedge against traditional market instability. Retail traders often panic during these quiet periods. They look for headlines, get influenced by fear or greed, and react too late. The institutions, however, are calm, deliberate, and precise. They understand that timing is everything. Every compression phase in crypto markets is like a spring being wound tighter. It stores energy silently. When the release comes, it's fast, aggressive, and sometimes unpredictable. This is why understanding institutional behavior is crucial. It is the roadmap of the next major move. The next big rally or retracement won't announce itself. It will happen quietly, then explode. If you are patient, observant, and prepared, you can position yourself to benefit from this next movement. Ignore the noise. Focus on the signals that matter: accumulation, liquidity, and strategic positioning. Crypto is not about chasing headlines. It is about reading the market beneath the surface. The next phase of the cycle is coming, and it will reward those who are prepared, not those who react. Now let's look at the broader picture. The macro forces shaping crypto, global markets, interest rates, and currency movements all affect digital assets more than most realize. When traditional markets show uncertainty, crypto often moves ahead of them. Quietly at first, then explosively. The dollar's strength, inflation data, and central bank policies all create ripples in crypto markets. Institutional investors track these indicators closely. They adjust positions in Bitcoin, Ethereum, and select altcoins based on global macro trends. Psychology plays a huge role in market behavior. Retail traders act on emotion. Fear and greed dominate short-term decisions. Boredom dominates the quiet accumulation phases. Those who understand this can anticipate market behavior instead of reacting to it. Pattern recognition is another powerful tool. Every major crypto rally in history followed long periods of low volatility and quiet accumulation. These patterns repeat because human behavior and institutional strategy remain consistent. Liquidity flows are equally critical. When liquidity concentrates in top wallets, sudden large moves can occur with minimal warning. When liquidity is thin, even moderate trades can cause dramatic price swings. Understanding derivatives markets is essential too. Paper contracts can create temporary distortions, but the real story lies in physical holdings and strategic accumulation. Monitoring futures, options, and exchange flows can reveal where smart money is moving before the broader market notices. Patience is essential. Reacting too early, chasing hype, or panicking during small moves leads to losses. Observing quietly, understanding the signals, and preparing positions ensures that when the market erupts, you're positioned to benefit. This is the phase where crypto rewards preparation, not speculation, not luck. Preparation. The quiet now will lead to the loud movement ahead. It's inevitable. Those who watch, analyze, and act patiently will profit. Those who chase the crowd or wait for headlines will miss the opportunity. And remember, crypto does not announce its moves. It moves silently, then decisively. Your success depends on your ability to see what others cannot. Now this brings us to the most important question. What should you do right now? The answer is not panic. It's not chasing green candles, and it's definitely not selling out of fear during quiet markets. This phase is about positioning, not prediction. The crypto market is designed to transfer wealth from impatient hands to patient ones. Most people lose because they react emotionally. They buy excitement and sell boredom. Smart investors do the opposite. During quiet phases, professionals refine their strategies. They manage risk. They diversify exposure. They think in probabilities, not promises. Bitcoin remains the foundation of the crypto market. It absorbs uncertainty, acts as a hedge, and leads every major cycle. Ethereum continues to evolve, quietly strengthening its ecosystem through upgrades, scaling solutions, and institutional adoption. Altcoins will follow, but selectively. Not every project will survive the next phase. The winners will be those with real utility, real users, and strong capital backing. This is why education matters more than speed. Understanding market structure protects you from emotional mistakes. Knowing when not to act is just as powerful as knowing when to act. History shows us one clear lesson. The biggest moves in crypto never happen when everyone is watching. They happen when attention is elsewhere. They happen during boredom, doubt, and silence. And then suddenly, the headlines arrive. Prices move fast. And people ask the same question again. How did this happen so quickly? The answer is simple. It didn't happen quickly. It was building quietly right now. If you want to survive and thrive in crypto, you must think long-term. Zoom out. Ignore noise. Follow structure, not emotion. This market will reward patience. It always has, and it always will. If you want the complete breakdown, deeper analysis, and full strategic roadmap. Make sure to watch the full long video on this channel, because the real opportunity in crypto doesn't come from reacting late. It comes from being prepared early.